Welcome back, and joining me for a closer look of the day's trading session is Viv Govendor from Ransus Offshore. Thank you so much for your time, Viv. The market's quite downbeat today. We saw the JSE all in the red and also most of the U.S. markets. What's got markets so bothered ahead of all the catalysts that we are getting this week?
I think the fact that we've had such a nice run, especially internationally, means that the market is like a bit nervous at the moment, ahead of what could be a decisive Fed minutes. Look, the US Fed, there's only two things that really change market valuations. The one is interest rates, the other one is taxation. And interest rates right now are a little bit uncertain. We had a big, fight or big, disagreement rather in the US Fed, one of the biggest they've had in like 30 years in terms of dissensions around the last rates meeting. And so when you have such uncertainty, I think it kind of makes sense to take the money off the table.
All right. Well, let's take a look, as we're talking about money, let's take a look at the higher prices that consumers are paying in South Africa. We did get that July consumer inflation ticking up to 3.5%. This is above the inflation target that the Reserve Bank is working on. Of course, though, still between the 3 and 6% current target range that we have. Just give us context of this jump.
Yes, apparently, food inflation is really difficult, and it makes a huge impact as well. I mean, we saw food up basically up at 5.7%, up from 5.1 the previous month. Of course, and as you know, I mean, this is one of the worst things to be seeing because, food inflation is more impactful on the lower end of the population income levels than on the high end because they spend obviously more on food than the upper income levels do. So it is quite a big negative. Regarding the Reserve Bank's target, look, it's a bit of a risk to do it too early, but they are correct. If we can get this down to 3% as our inflation target, the impact it would have on the economy would be spectacular because it would mean that the cost of financing, investments going forward would be significantly cheaper. The cost of the government borrowing we have right now would be also cheaper. But yeah, it has to be done in the right time, and we have to basically be pretty certain that we control the inflation rate around the 3% level before we hit the 3% inflation target.
Well, I mean, just looking at that desired inflation target of 3%, Viv, and what we saw now, where inflation is above 3%, and there's this narrative that we can expect inflation to tick up some more in the coming months. What does that then signal to the Reserve Bank? I mean, we had just gotten a cut. Does it make things a little bit more difficult for Lesetja Kganyago?
Yeah, most certainly. If we did have a 3% target right now, and we saw this number, we'll be looking to increase interest rates, which I think would be the wrong time to be doing things, especially when you look at the U.S. looking to cut interest rates at the moment because of lower growth. So yeah, it does argue the fact that maybe we're not at that point yet where we might be, able to achieve that 3% target. But if we maybe lower the target a little bit from the current range, from the midpoint we have right now at 4.5%, maybe a bit lower, it could be a step-by-step measure that gets us to the level we want to get to. But maybe 3% might be a bit aggressive right now. But the longer-term impact, if we are able to achieve it, like I said, would be quite good for the country.
All right. Well, Viv, let's get into some of the company news that came out of the JSE. Let's take a look at gold. DRD Gold coming out with year-end results. Top line rising 26%. That growth translating to a 69% surge in headline earnings per share. Were stocks flying, maybe except on production?
Yeah, look, I mean, firstly, they benefited obviously from a much higher gold price, and so if you look at the month, the gold price basically went up. We see a similar kind of movement with regards to the kind of the actual revenue coming in, the profitability, etc. So to a certain extent, when it comes to these miners, when they see higher commodity prices, that's the main driver for improvement. I mean, in fact, the revenue didn't increase by quite as much, even as the gold price increased, showing that there was maybe some other difficulties out there. The longer-term, moves to basically go on some lower-grade, tailings that they're going to be working with. I think that might, work out if the gold price stays where they are, but it could be a bit of a risk because if you're going to a low grade, basically in terms of, extraction, you want obviously a higher gold price to justify that, and that might make them a bit more vulnerable in terms of their margins at the moment.
All right. Well, let's get into property. Nepi Rockcastle releasing its interim results actually yesterday after market close. But of course, The market's reacting to that today. The company highlighting a strong operating performance and the benefit of transactions it completed in 2024. All that leading to a 3.1% rise in distributable earnings per share. A quality performance?
Yeah, look, I mean, it's a reasonable performance. Apparently, they've passed 8 billion euros in their portfolio for the first time in their history, which is obviously showing a bit of growth coming through here. And also they have a reasonably low vacancy rate, 1.6%, which is obviously again a big positive. I mean, these companies want to be as full as possible in terms of their assets because they give them the best possible return. Looking at what they have going forward, I think some of the things that they're doing around, for instance, like energy and so on, I think might be quite interesting for the future. We are likely to see demand increase over time. The one fear I do have is that, as we see the retail sector, change over time, I do think that we are likely to see good things like driverless vehicles, etc., drone technology, and so on. Over the longer term, we are likely to see more movement away from towards the importance of retail sites, more towards like distribution sites, and that might be something that's longer term impactful in them. But right now, the results look quite good.
All right. Well, what else looks good to you, Viv? Your stock pick for today?
It's TSMC, which is the Chinese semiconductor manufacturing company. Everybody knows about NVIDIA, the company that's the most valuable company in the world at the moment, most valuable company in history. But you look at NVIDIA's basically advantage that they have. They do the designing, but the building is done by TSMC in China, sorry, in Taiwan rather. And Taiwan, seems to have that advantage for whatever reason in terms of like manufacturing these high-end computer chips. TSMC has this advantage that it's very difficult to see anyone replacing them in the near term. And as we see, infrastructure spending increasing in AI, which we're likely to see going forward, with things for inference, I think TSMC is going to be a thing that benefits. I mean, if NVIDIA basically fails and Intel takes up, or Intel fails and AMD takes up, that's all going to likely, in the end of the day, benefit TSMC.
All right. Well, thank you so much for your time and for your insights today, Viv. That was Viv Govendor from Ransus Offshore.